Hello my wonderful people. Today I'm here to share a very simple strategy, and it's something I stumbled upon when I was in the market, and I thought maybe I'm not using it personally so much. I use it when I get time to check the market, but I'm not using it so much. But I thought it would help somebody, so I said let me share it. Okay, so this is an indicator. It is a custom-made indicator, of course, for the MT5 PC version, not a mobile version, PC version. Okay, and it has supports, which are the green lines that you're seeing, and no, this is the support and this is the resistance, according to whatever pair that you're trying to trade. So this line that you're seeing, these colors are tailor-made for me. I changed the colors. When you receive your own, this is how it will be looking like. This is the indicator. So these are the colors that I've set mine to be. Okay, so you will also come and set yours to whatever colors that you want. Okay, so there is the RSI line, which is this, okay, which is also called the signal line. There is the resistance, which is the top, and then there is the support, which is the bottom, and then there is a yellow line and a pink line. Are not really line, they are squares. I will explain them as we go, but these are divergences. When divergences happen, they will show such, and the pink one is all the time where it's reversing from. So there is a divergence, and then there is where it's reversing from, or where it is probably spiking. Okay, so you will just input your own personal colors. So I've also combined this strategy with I always use the normal TDI indicator. I love a TDI. I use it in all my strategies actually. So how does it work? For me, I would take it so slow with this kind of strategy, in the sense of, you see where it is spiking is almost at the support or the base level. Okay, you see all this. So how I would use is, anytime it approaches this line, see here, it comes and creates a newer lower level, of which it is almost around this line. So the indicator also has three lines. There is this red line, there is the white line, and then there is the green line on top. So those are the normal standard levels. But then there is the moving one, the moving supports and resistances. Okay, so when it creates the new level of a new support at this point here, because it came, it pushed past there isn't the former new support, so it created a new one, of which it was almost at our zero line. So it created a new one, went on top. As it was coming to touch again, this is your point of entry. So what you can do, of course you may not be able to catch all the spikes. You can always wait as it is coming to catch. You open a trade. In case it spikes, it is good for you. If you don't, put a stop loss of 3 candles. Okay, put a stop loss of 3 candles. So just wait, 3 candles, no spike, close it. You might, like this point here, you see it came and it went across. So if after it had crossed like this point here, 3 candles, no spike, you close it. So of course it will be very manageable to have a stop loss of 3 candles here. And then when it spikes, the next time it will come, you see a spike will come around this place. So another thing is, if by the time this the RSI line is coming to touch your support, okay, is coming to touch your support, let it not be the RSI line on the TDI is already touching the lower Bollinger Band. That is a tip for you. Okay, let it not be it is touching the lower Bollinger Band. Check all the places that it has spiked. It spiked at this point when it was touching the lower support, and here it was in the middle, not touching the lower Bollinger Band. Come and see this other spike here. It was touching the lower support, and at this point it was also touching exactly the lower Bollinger Band. It had not started following like here. Okay, it had not started following like here. So those are some of the small tips that will help you to sift the bad signals from the good signals. Yeah, and then when you see this kind of thing again, it came, it crossed here. Know that it is a long trend. Wait until at least a few spikes have come, and you see it came all the way, formed a new lower high, and then at this point this small spike comes. It spikes. As it is coming to touch, it didn't touch exactly, but it spiked when it was almost. So when you see this second, of course if you are very keen, you could have almost caught this, or even maybe if you missed, you seen it this time round it went higher than this level here. So immediately after that, it was supposed to show you that even on the RSI, because you see here, it was the second spike was coming on our market baseline. So with this kind of information, you will know the third time that as it is coming towards the market baseline again, it will spike. And that is why you're seeing here these pink lines. I told you they are when there's a reversal point, or then a new high has been formed, and then this yellow signal is when there's a divergence. Like here, you see it is ranging along the same line from this to this, and on this other end there's a divergence. But of course I'm not using the divergences here, we're just trying to catch the spikes. So if this second spike is happening at the middle market baseline, please come and place the other one as it's coming towards the market baseline again, and you would have caught all these spikes. Okay, so that is how to use, because you may be able to miss, and especially after a long trend, and then there's a first spike to break the trend. The second one, if the second one spikes when it is almost, and come and check on top here, it is a market baseline, then place the trades as it is coming again. Okay, so that is how to use to catch spikes from the market baseline of the TDI, because if you are to wait for it at the bottom here, it would spike on you earlier before, because the initial level was here, so it would have come all the way, but it spiked earlier. So it is a new support level that has been formed, so it would spike on you earlier. So if this second spike, which is touching the lower support, spikes is happening at the market baseline, just come and take on the third, and it will really you will catch the rest of the spikes, because it is now on an uptrend. So here again it comes, as it's coming to touch the lower Bollinger Band, of course it spikes again, but our main focus is this support line. Okay, our main focus is this support line. So let's see the points that you see, like here, coming, touching, spiking. And as I told you, if it has crossed the market baseline, let it not be trending like this point here. Let it not be going down. Like the RSI line should not be concurrently running with the lower Bollinger Band. You see this one, it was coming to touch, it's touching the lower level and spike. Okay, see here again, this one here, first spike goes up, so here it spiked earlier before reaching the former level, which was here. So it spiked earlier. So if it spiked earlier, come and check if it spiked on your market baseline. So if it spiked on your market baseline, you can choose to place like immediately, because that shows you. And what was supposed even to show you that we have started an upward trend, you see from all this here, it was showing you that we are going to break the strength of the trend. Yeah, we are going to break the strength of the trend. So the moment you saw this, before it reached the former level, you can place from there, and especially if it is above our market baseline. So from there, the trend will be going up for some time. Okay, so you can also choose to look for your own exit points. Yeah, but some people can take one spike and they're out. See here, as it's coming to touch spike, this one it crosses. So I told you, if you can always place this trade, but again this point here would have made you not to qualify for it, because our RSI line was already concurrent with the lower Bollinger Band. So you could have left this. Come and see where it spiked here. Our RSI line for the TDI was not touching the lower Bollinger Band, so this was a good point to spike, but here it had already touched. Let's look at other points where it spiked. So you see this point here, you could have placed, no, this was it spiked earlier, so it formed a new high and then came concurrently with it. So as long as it's gone out, it's crossed, don't mind about it until when at least it will break that trend. Okay, it will break the trend. So as it's coming back the second time again, check where it has spiked. Okay, so check this point again. So the first one crosses, the second one, as it's coming to touch market baseline, spikes. So this one also forms a new level and then spikes. So of course you cannot be able to catch all the spikes, but something else that I can give you a tip. This line that you're seeing on my main chart, this is moving average 50, EMA 50, and this is EMA 200, exponential moving average 200. So anytime you will find the market is spiking from around levels 200 or level 50, know that that is a continuous trend. Okay, know that that is a continuous trend. So the potential of it spiking more if it has reversed from level 200 is high. Okay, so let's look at other points. So you can choose two approaches to this indicator. Either when it touches, you place, or you start also looking for the points when the TDI is touching, and especially it is on an uptrend. Okay, so just check it out. If it will work for you, super good. You see all these points, sweet points. And especially if we are above level 200. Okay, you see all the time as it's coming to touch the lower support line, as long as we are above, it will spike. Also, if we are above 200, as it's coming to touch again the lower Bollinger Band of the TDI, it will always spike. Okay, so these are some of the points that you can always pick your spikes from. All this, as long as the RSI line of the TDI is not running concurrently, like this point here is not running concurrently with the RSI line of the TDI. Okay, so in this instance here, you wait at least until the first spike has happened to break that trend, and then come and wait for it at the market baseline. If the more spikes that are coming is happening at the market baseline, then know that that is a trend continuation and just ride with the trend. Okay, so that's it for this tutorial, guys. Actually, it was not a strategy, it's just an indicator that I'm sharing. And those that are interested, the download link will be in the description below. I've shared it in the Telegram channel, so you can access it freely in our Telegram channel, and so use it to your advantage. That's it. God bless you and happy trading.